I previously went through putting the transactions in T accounts. Remember that if you need to know the plus and minus side of every type of account, and if you think of aid, assets, drawing, and expenses being plus minus, and clear, which is capital, liabilities, and revenue being minus plus, that's just a really quick way to remember which side the pluses go on versus which side the minuses go on. So debit just means left and credit just means right. And remember, for every transaction you must have an equal debit and credit. So this is the screen is showing the completed T accounts for 2-3A, and the balances are marked in yellow. And then after you do all of the transactions, you do something called a trial balance, which we talked about in the last video, that shows the balances on the last day of the fiscal period. So you'd have the company, the words trial balance, and the date. So this would be June 30th, 2011. Now these accounts are listed in general ledger order, so as assets, liability, owner's equity, revenue, and expenses. What should have debit balances would be your aid accounts, your assets, your drawing, and your expenses. What should have credit balances would be your liabilities, capital, and revenue. And these must equal. So if you see what I put in yellow here, there should be a single line above the yellow, a double line underneath. Once the trial balance is produced, you're ready to make the first of the three financial statements. The first financial statement is the income statement. The income statement shows the net income or net loss. In fact, an old term for this form used to be called the profit and loss statement. But I guess we're getting more positive in our speech, and so it's just now called an income statement. So it's the name of the company, income statement. Now notice the date here is for the month ended June 30th, 2011. So it's not the income statement on July 30th, but it's the income statement for the whole month of June. As you're doing this, the information is going to come from your trial balance. So we're going to be zeroing in on the revenue and the expenses. So these are the accounts that go on the income statement. So the first category is to write the word revenue at the left, followed by a colon, just because accounting is very traditional, and this is the way someone thought it would look nice to have revenue there followed by a colon. If you look up here, you can see that professional fees is our revenue account. So you indent approximately a ½ inch and you write professional fees, and then you go over to the right. Now there's a left and a right hand column. This is not a debit and credit column. This is just two columns. Because we just have one revenue account, we write it over here. If we had two revenue accounts, we would list them here and then put the total revenue over here. But this is it, just one. So we're done with that, and it requires a $sign. The next category is for all these expenses. So we're going to write the word expenses followed by a colon. And then each of these expenses are going to be listed starting with salary expense. So you would indent again about a ½ inch. And as we write that in, it's going to be spelled out in full. And notice that the first in this list now is going to have a $sign. So salary expense was $880, $sign in front of it. The next one is rent expense. So rent expense is now listed, and the amount is over here. No $sign because it is not the first one. Okay, the next one is utilities expense, so we're going to list that one. And let's see, we have miscellaneous expense next. So miscellaneous expense would go next. And at this point now, we're done. Okay, and so we're going to add up all of these four expenses. So we're going to indent even more and write total expenses. And notice that the total of the expenses goes in the ending or the right hand column and there is no dollar sign. Okay, now because we're adding these up, we're going to draw a single line under this yellow area. Over here, we're going to subtract the expenses from the net income. Anytime you add or subtract, you need a single line to show addition or subtraction. So there should be a single line under 2615. Okay, once we get the total expenses, we're going to compare the expenses to the total revenue. And in this case, our revenue is larger, so we have a net income. Now, net income is going to go back at the left, and then we're subtracting these two numbers, and the net income for the month of June is $1,444. And this one is going to have a double underline underneath it. So revenue is the first category. We indent and we list it. If it's just one, it goes over here. Expenses is the second category. We're going to indent, list them all in here, have our total expenses, and put them over in this column so we can subtract expenses from revenue to get our net income. So this is the first of the three financial statements. The second one is the statement of owner's equity, and that's what we do to kind of bring the capital up to date. Is remember that capital or owner's equity is a combination of capital and drawing and revenue and expenses. They all affect capital. So what we're going to do next is do the income statement. So the income statement is just going to be on this same form, same page. Here's the name of the company, the name of the form, statement of owner's equity, and again it's for the month ended June 30th, 2000 and the current year. Okay, we're going to start off with the beginning capital. Now this was a brand new company, so when it first opened there was no capital. So as we put down the name of the capital account, we put down the first day of the fiscal period, June 1, and we show that it started off at the very beginning of that day with no capital. Now the owner on the first day of the month invested $40,000 in the company. So we're going to list the investments here next. The investments during June were $40,000. Also, we have a net income during the month of $1,444. And do you see where it comes from right here? That's our net income. This is the combination of our revenue and expenses. We're going to subtotal these now. So we're just going to write subtotal, and there's going to be a line under this number because remember we're adding these two numbers together, so we need a single line under the yellowed number. So that's our subtotal. Now what's going to be taking away from this will be our drawing. And so we're going to write less withdrawals for June. Now notice here that we're going to take this number and subtract 800. So we have to draw a single line under 800. Okay, the difference between these two numbers is going to go right over here. And this is going to show how much our capital is increased during the month. When we take our investments and our net income and our drawing and combine those all, we've actually gone up $4,644. Which means if we add these two together, okay, so if we're going to add these two, we need a single line underneath here. This is going to show our capital as of June 30th, last day of the month. And after here, you're going to have a double green line. Okay, so what's changing capital? Investments drawing, revenue, and expenses, and all of those have been brought into play here to bring our capital account up to date. The third financial and last financial statement we're going to do is called the balance sheet. So the balance sheet is the name of the company, the word balance sheet, and notice the date now on this is just the last day of the month, because we're going to show account balances on the last day of the month. Now, when you did an income statement, revenue was at the left with a colon after it. Because of tradition, someone decided that this category is going to be centered with no colon. So first thing we're going to do is list all of our assets. Now the assets, again, where we're going to get that would be the assets listed in our trial balance, which are these right here: cash accounts receivable, office equipment, and office furniture. These are our 4 assets. So these are going to go over here, or the number of assets we have, actually, yeah, the 4 there. Okay, and we're going to put the amounts in here. Now notice we're using the inside column because we're going to add them up, and then we're going to put the total over here. Because we are adding these 4, we're going to draw a single line under the yellow figure, and over here we're putting that over here. It's got a dollar sign, as does this one, and there's no line underneath it. Okay? Next, very importantly, we leave a blank line. This is the first income statement where, or a financial statement where you've had a blank line. So we're going to put assets, liability, and owner's equity on the balance sheet. So this is where we're going to write liabilities, and it's going to be centered also. When you look back at your trial balance, the only liability account you have is accounts payable for $1,800. So we're going to list accounts payable, and because there's just one, we can put it right over here. If there were more, we would list it here, and then put the total liabilities over here. But there's just one. So that's the only liability account that we have. And so next we're going to skip a line and then write on this line owner's equity. So assets, liability, owner's equity. Remember the fundamental accounting equation: assets equal the liabilities plus the owner's equity. Well, the name of the capital account goes next. So the name of the capital account is R. Morgus Capital. It doesn't have a date or anything after it. Now, where we get this is from the statement of owner's equity. So if you go back and look at your statement of owner's equity, see right here the green figure is what the ending capital balance is. That's our new capital balance. So that's what's going to go right here. So now we're going to add our liability and owner's equity together. So we're going to draw a line. We're going to add the liability and owner's equity together, and we're going to say, identify that as that this is the sum of the total liabilities and owner's equity. Okay, it's called a balance sheet. Now this number here, the total assets, is the same as the liabilities and owner's equity. So is this your fundamental accounting equation? The assets equal the sum of the liability and owner's equity. So this figure here has to equal this figure here. And the green indicates you want to have a double underline under each of the green. And that ends this one.